Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, we're going to talk about the debt load that GameStop is talking about taking on in its purchase of eBay, and what does that do to the company? What does that do to cash flow? What does that do to the valuation? Because it seems like there's been some confusion on the interwebs about how debt works. And we're going to get into a little bit of tinfoil, I guess you could say, on May 13th. I'm a little curious, partially because, we have these items listed for sale by Mr. Cohen himself. Some of the items have already expired. The rest are expiring within the next 2 hours. And are these, 2 hours from now is what? It's 3 p.m. Central Time, 4 p.m. Eastern. In other words, they all finish right before market close. So will we see an announcement after hours? And we'll get into some other 10 that all lines up to potentially today as well. So it's just an exciting day to watch the stock in general. But we do have, 2 hours here to appreciate some price movement. Also to say what's up on the chat. I'm probably not going to see every message today. So if you want to make sure I see it, of course, feel free to leave a super. I do appreciate it. All the earnings go to DRS Book GME shares, but it is not required or expected by any means. So please don't feel pressure to do so. But I did also want to say thank you to the subscribers. 3776. That's the limit for the Pokey Sub Club. So if you want to get in, it's less than 200 spots left in the Pokey Sub Club. Thank you to those who subscribe. Thank you for the comments, the likes, all the above. Thank you also to the fans and friends of the channel. I do appreciate it a lot. So let me say what's up. Let's watch the ticker a little bit. And here in a minute, we will talk about debt and take some rabbit trails to field questions in the chat as well. And look at the ticker start to pump as soon as we're streaming 5/13, the day of destiny, the day of our Lord. Let it be. We do need to get into that 10 before long here, so that if we do end up seeing some pretty fun appreciation, then we can enjoy it together. That said, hello everyone. Hey Adam. Hey Clark. Jay Card. Jordino. Red King. Duke. What's up? He says, let's go, Jeremy. Can't wait to grow a wrinkle. Thanks. CD, great to see you. Yeah, eBay is also running today, so probable that Cohen and Cohen's constituents are buying more and more of the float to control more and more votes, to initiate the proxy war to acquire eBay. Very exciting. Clark got his biggest single GME purchase ever in today. Way to go. Way to go. Benjo, Backman, great to see you guys. Burgess, BTF, great to see y'all. I have not covered, there's 2 Ryan Cohen interviews I still need to do. So I'm waiting to listen to them so that I can capture my reactions and thoughts live. But I am excited to do so. Unfortunately, there's been too much concrete material we really got to get to. But I do want to. A super already, J-Card. What is up, man? Thank you so much. eBay, why not pull Pac-Man maneuver if Ryan Cohen turns up the heat? Peter, hello. What? J-Card, what is the Pac-Man maneuver? I don't know. Can you share, what do you mean by that? You mean go through the left side of the wall, so then you come back in through the right side of the wall? I don't know how that relates to finance personally. Do you mean eat one of the little super thingies so then you can turn around and eat the things that are trying to eat you? Is that what you mean? What if eBay tries to eat GameStop instead of GameStop try to eat eBay? Let me know what you mean, and then I can weigh in on it. But M&A defensive move. Like, why doesn't eBay buy something else, not GameStop? Maybe eBay buying something that's not GameStop. I mean, it's very, like, I don't know how that, like, it's a big question to me is how much of eBay does Cohen already effectively control? And ultimately, whether eBay buys something or not doesn't immediately change like the valuation of the company. You mean buy GameStop? They can't buy GameStop because Cohen's not going to sell. I mean, they could buy shares of GameStop, but that is going to force a GameStop squeeze, which will only increase GameStop's ability to an opportunity. If they buy some other random company, then okay, X cash goes out the door, X equity comes in the door. It's the same net market cap either way. So like they end up in the same situation as far as what type of purchase price is eBay putting forward, or sorry, is GME putting forward for eBay? Can GameStop gain enough eBay concentration to force the vote? Can eBay gain enough concentration into GameStop? I don't think they can. Like they can buy up derivatives, warrants, and bonds, but you're dealing with a company that has a lot of cash already. They own a lot of their own stock. Cohen owns a lot of stock. And then the DRS percentage is already so high. If GameStop goes up, like if they start buying up things, it just creates upward pressure on GameStop stock. So like, I don't think trying to reverse, Pac-Man maneuver, eat the super apple and then eat up the bad guy, I don't think that works in eBay's favor. I think it pushes GameStop up substantially. And when you're talking about a company that right now its market cap is 10 billion, if you start buying up the float, like how volatile could this get? How many shorts are still out there for GME? And if eBay triggers a short squeeze for GameStop, eBay makes a lot of money, right? So like they could sell their position and make a nice profit, but GameStop would make more money than eBay would. The question is, can eBay get a 50+% control of GameStop? And I don't think they stand a chance to do that personally. They are already net cash negative. eBay has negative 1 billion in net cash. GameStop's sitting on over 9 billion in cash and equivalents. So if they want to create a war over GME shares, I think that ends up creating a lot of upward volatility that works in GME's favor. But it doesn't sound like that's what they're trying to do. It sounds like they're trying to say, GameStop, go away. I don't think they want to do anything to try to add pressure or like, I don't think they want to put any chips in GameStop's corner in terms of buying up their equity. Personally, I also don't think they want to own GameStop. If you buy up GameStop, what's the goal? Now you own a bunch of GameStop, And if you start buying and the price starts rising, now your cost basis is higher and higher. So what would eBay's idea be to add value to GameStop? GameStop, Cohen said, they already reached out to eBay to try to partner with them over a year ago and said, hey, we can, just like GameStop did with PSA, they said, hey, we can both make out way better. We both get a cut, right? Let's work together. We both win. And eBay didn't even return the interest. They didn't even answer the phone. Nothing. So does eBay's leadership see value in GameStop, they don't even want to have the conversation about a risk-free partnership, right? About a partnership that requires no ownership in GameStop. So if they don't want to partner in a way that's just adds revenue to their business, why would they want to partner in a way that costs a ton of money to buy the actual company? And now they have a ton of equity risk on the line. I just don't think that's the way they want to go. If they did try to go that way, I don't think it would work out in their favor. I think it would give more ammo to GameStop than it would give to eBay at the end of the day. And net, they'd end up worse off than before. It's also like it would signal to their shareholders that they want GameStop. And they just said they don't want GameStop. So I think eBay's management's kind of stuck in a corner. Those are my thoughts. Yeah. Thanks, J-Card. I do appreciate it. Like, I see the synergy there, but I think if eBay acknowledges that there's synergy there, then it weakens the eBay shareholder base confidence in the management. Like, it makes it more likely that more voters would vote for GameStop's acquisition if eBay starts saying, wait a minute, we as a combined company, we can be worth so much more, et cetera, et cetera. I just think like you're going to end up losing votes. You're going to end up giving power to GameStop. Like, you're going to end up doing way more damage than whatever money you would have made and whatever ownership you would have gained into GME. Those are my 2 cents on it. Tristan says, great video yesterday. One of the best yet. Thank you very much. Berga said, sentiment calmed down. Geez, what a ride. Yeah, I'm glad I could add some stability to it. Wax and Candles was recommended my videos by a friend, long-term GME owner. Any thoughts on PowerPacks LLC and the revenue being recognized by GameStop? Looks like legally they might not have to show the sales yet. Wax and Candles, definitely go back on my channel and do some PowerPacks due diligence. There are several PowerPacks related videos. Breakthrough PowerPacks finding PowerPacks impressive sales. There's also a minute ago. What's the one I'm looking at? 11 PowerPacks clues that all tell the same story. And then me arguing with other people's takes on PowerPacks. Exactly where GME is reporting PowerPacks. Critical implications for PowerPacks. Oh, no, don't do that. Anyways, if you watch like some of those videos, you will see that my very, very clear opinion is that PowerPacks is not being included in any of GameStop's revenue or expenses, but there are ways that it is showing up on the balance sheet and income statement. So definitely do some catch up. Wax says, perfect. I'll check them out. I've been following new videos, but lots to catch up on. Appreciate the level-headed take on it all. Thanks, Wax and Candles. And welcome, by the way, welcome to Budget for Life. Glad you're here. Clown Doctor says, slam that like button, folk. John, today, great to see you. Great to see you guys. Ryan Sartell says, so many shills have emerged this week. We are definitely scaring shorts. Agreed. And Moth says, I'm really annoyed about posts, I think on Superstock, talking about Ryan Cohen doesn't want to be GameStop CEO when he literally had an interview where he was just chairman of the board and said he wasn't interested in being CEO. I don't quite understand your comment, Moth. It's very obvious Ryan Cohen he is the CEO and now he has $36 billion on the line that he can only earn if he continues to serve as CEO. So I don't know where that drama is coming from, but the whole benefit, if you're a shareholder of GameStop, the only benefit for you for any of this is to keep Ryan Cohen CEO, right? That's the whole. Zedgy says, man, I've never seen so much FUD from so many different channels. People that never cover stocks are all getting involved bashing GameStop. Very exciting. Very exciting times. You gotta love it. Man, how much did the GameStop sign end up selling for? I wonder. Anyways. I don't really have to watch these. They all expire right before market close. So it is what it is. Oh, 9 minutes left. That's kind of fun. GameStop, let's go. Congrats, John. All right. Let's talk about the 10 real quick first. Why are we excited about May 13th, the day of destiny? Okay, so someone on 4chan, which I don't even really know what 4chan is, but someone back like 2 months ago made this post that said $125. I'm not going to say anything else about it. Apparently, that same person has made some type of remark saying that on May 13th, there will be an announcement. I don't know the details. I haven't verified all of these tins. So I'm just reporting because it was enough things. And I was already interested because of the second bullet point here, which is Ryan Cohen's eBay auction ending. What if it's a countdown? But what might happen on the other side of a countdown? We will see. Some other 10, though, other than random person on 4chan that says there might be an announcement. The day Roaring Kitty returned in 2024, that's a little bit interesting because he did a tweet storm in April of 2024, right? Let's just verify that one real quick. Is 5/13. There's June. Oh, big. So he did. Oh, it is from May. All the tweets, they're all in May. I thought they were all in April. Let's see here. Okay, so there's 2021. Jeez. And then there you go. This tweet on May 12th, 2024, after a 3-year hiatus. Is that even real? And then on the 13th begins his every 15 minutes memeing. So there you go. The 10 checks out. Does that mean anything? Doesn't really mean that, hey, 2 years from now, this day is also going to be a significant day. But it's something. Apparently, Ryan Cohen tweeted his infamous "Oops, Moaz, my bad" on May 13th. That tweet got deleted. So I wonder, does anyone have a screenshot? This screenshot says that it happened on December 5th. So they are doing a, quote unquote flip mode for that date. Instead of 12/5, they're calling it 5/12. A lot of this is pretty weak. Roaring Kitty, the hack was posted at 5:13 p.m. I don't have a way to verify that because it's been deleted. but 5:13 would be Eastern time, 4:13 Central. Regardless, that's a little interesting. Oh, Marvin's saying that is May 12th right here. Oops, I think I just deleted this. Yikes. Is it true? This is May 12th. X does the day before the month. Is that true? Well, they posted it 1 year ago. I don't know. There you go. This person says it was on May 12th. Okay. Thanks, Marvin. So there you go. Does that mean that 5 years later, May 12th is a significant day? I don't know. But you start adding them all up. A teddy belt buckle featuring the number 13. Roaring Kitty's post from 2 days ago happening at 5:13 p.m. Eastern. I will say normally times go in Central Time with GME related things, but still. 4:20, the fourth day of the 20th week, is May 13th. Another pretty weak one. The time tweet posted on 12/5, flip mode 5/12. So that is referencing, so after this big old tweet storm that we went through, man, that was just such a fun time. How many times have y'all watched all those? Here you go. Here's the time one. So this was posted on December 5th. And one of Roaring Kitty's memes said flip mode. So do you flip that? 12/5 becomes 5/12. Who knows? There's a Teddy clock, TikTok written in blue and red, corresponding to numbers 5 and 12 in the Teddy book. This one was always a little bit interesting to me. Ryan Cohen posted 665 times the name of our president. 665 days later from the date that he did that is May 13th, 2026. To me, that one's like, that's kind of interesting. It's kind of interesting. Historically, we've seen volume spikes on May 13th. Some other people apparently are tweeting about it. Ryan Cohen changed his thumbnail to this guy, which is Dr. Manhattan. Oh, sorry. Maybe I'm not even reading that right. Anyways, this transformation from John Osterman to Dr. Manhattan, sorry, I don't even really know the references, happened on May 12th. So there you go. So May 12th to May 13th hype. To me, like the auction timer is interesting. The Ryan Cohen's, posting the same name 665 times. That's interesting to me. Obviously, historically, GameStop often has a run from mid-April to mid-June. So it's just generally exciting times. And other than that, a couple other random stuff. The 4chan Insider might know something, might not. I didn't see that post. I don't even really know what 4chan is. So there you go. There's the 10. Part of the reason why I'm having fun watching the stock today. By the way, what is up? 147 of you guys in here. Glad you're here. We are pretty soon going to start talking about the debt. Help you guys understand it a little bit better. Continue to take questions. What's up, Skybike? What's up, Jeff? Okay. Let us talk big picture about debt, because in my most recent video, what you're not seeing about the $2.5 billion share authorization, some people in the comments are like, hey, you forgot about debt. When GameStop borrows $20 billion, that means that GameStop plus eBay is only going to be worth 40 billion, not 60 billion, because it's 60 billion minus the 20 billion in debt. And I just want you to know that that is not true. It's not true. Let's talk about an example that most of you would probably understand. If Matt Burr says hit the like. Thanks, Matt. If you bought a house, you put $100,000 down for a 20% down payment, you got a $500,000 house. So you borrowed $400,000. Before you bought the house, you had $100,000 cash. After you bought the house, you've borrowed $400,000. What is your net equity? What's your net worth? Does anyone know? I know we're getting kind of nerdy. We're kind of mathing it here. Does anyone know what your net equity would be if you put $100,000 into a house, you borrowed $400,000 for the house, and the house was worth $500,000? Skybike says $1, Bob. Jeff says 500K. Red King and SC got it. 100K. 100K. If you have the same equity because your asset value went up at the same amount as your debt went up. So you own, instead of owning $100,000 in cash, you now own $500,000 of house, and you owe $400,000. But your net worth, your net equity is still the same 100,000. Still 100,000. Does that make sense so far? If you borrow money and burn it, if you borrow, which is what a lot of you did with your student loans. Just kidding. But like, seriously, if you borrow $1 million and then throw it in the ocean, then guess what? You have lowered your net equity by $1 million because you took $1 million and traded it for nothing. If you take $1 million and you buy something for $1 million that's worth $1 million, then your equity has not changed. Now let's talk a little bit about the strategy, because one person said, Far Body Bonanza Danny said that your net worth would be negative 400K plus the interest. And then Jeff Jolly, this is actually a very timely comment, said your net worth, if you sold the house immediately for $600,000, then you would have $200,000. Those two comments are the perfect illustration of what happens with debt. The reality is that you have a much higher upside and a much lower downside. Right? If you bought a house and all of a sudden that house, you don't have insurance on the house, and then the house gets, taken over by trolls, some minions and dragons come breathe fire on your house, and then people forcefully remove you, and we're in a anarchy world where no one even values your property. They take it from you. You've got nothing to speak for it. Skybike says, hate when that happens. Then what happens? Not only are you 400K in the underwater, but you also have the cost of the debt. You've got 400K plus interest. That's what happens if you take the money and the asset you buy ultimately is worthless. So if you bought a $500,000 business with $100,000 of cash, $400,000 of debt, and then the business goes bankrupt, is worthless, then you would have negative $400,000. Like, you would still owe the 400K, but you've already spent. Well, you'd owe the whatever. You'd owe the 400K, and the 100 you put down is worthless. So now you're 400K on the hole, and you owe interest. That's the worst case scenario. If you buy something that's worthless, if you take the money and burn it up, if you throw it in the bottom of the ocean, then yes, debt would lower your equity dollar for dollar. But Jeff shares the other side of the coin. If you buy something and it is already, from the day that you buy it, it's worth more than what you paid for it, then you have just made money. John Chess says 50% cash, 50% livestock. I like that. Clown Doctor says, like crashing a car you owe a loan on. Yeah, that's another example of burning the money up. You still owe the money. If you didn't have car insurance, you're SOL. You just you lost, you borrowed the money and you spent it, and now it's gone. Congrats. Borrow a bunch of money, go to Vegas, gamble it all away. You thought you were going to get rich, but actually now you just owe a lot of money. On the upside, though, let's say you're a West Texas oil tycoon, and you've got an idea. You see some land that has you have high confidence that there's some oil in that land, but it's the late 1800s or something. I don't know. You know that there's a pirate treasure in the dirt, but no one else does. So you go buy the land for 100K or for 500K. We can keep using the example. You borrow 400K to go buy the land. And then it turns out, hey, there's pirate treasure. Hey, there's oil here. Well, shoot. Now that we know that, this land is actually worth $1 million. Well, if you borrowed 400 grand, spent 100 grand to buy some land for 500 grand total, but now the land is worth $1 million because of the value of the land that was not recognized before, but now that you own it, you are able to access it. Then what happened to your net equity? You used to have $100,000 in cash. You spent it all plus 400K in debt on some land. You took that 500K in land. The land's now worth $1 million. So what happened to your net equity? What's your portion? You still owe 400K plus debt or plus interest. What does that leave you with? 600K. Y'all tracking? Making sense so far? Jeff says, why are pirates pirates? And the answer is, because they are. Thank you, Jeff. Username checks out, by the way. full username is Jeff Jolly. You got to love it. So the question really, there's a lot of arguments online. Skybike says, a wrinkle on my brain is forming. It hurts. A lot of people are arguing about it's too much dilution. A lot of people are arguing about it's too much debt. When really, the only thing anyone should be arguing about is eBay what you want to buy? And is the price you're paying for it a good price? Then it's just, what are the pros and cons of different ways you can structure the deal, which we will get into today in this live stream. We're going to dive into kind of the debt side of the equation today. But ultimately, if you think you found land that has oil underground that no one knows about yet, and there's pirate treasure in the dirt that no one knows about yet, then if everyone thinks the land's worth $400,000 and you decide to pay $500,000, you know what's going to happen on the internet? Everyone's going to call you an idiot. Look at Mr. Stupid Pants. He paid $500,000 for a $400,000 piece of dirt. Loser, idiot. Now his net worth is -0 because he spent all that cash, and now he has a $400,000 value property with $400,000 of debt. He just took $100,000 and burned it up. That's all fun until after you close the deal, when a week later you start selling freaking gold pirate coins on eBay. You know? And everyone's like, wait a minute. Where did this guy get all the gold pirate coins? Wait, these are going for $100,000 a piece? How many pirates were in West Texas anyways? You know? And all we thought it was only worth $400,000. Turns out it's actually worth a lot more than $400,000. So the question is, right, the big picture question, Cohen's saying eBay is, he's agreeing, he wants to buy eBay for $56 billion. The question's pretty much, is eBay worth $56 billion? Is it worth less than $56 billion? Is it worth more than $56 billion? And whether you are paying with stock or paying with cash, your immediate term, what's going to happen to the shares? Like, is it accretive or is it dilutive? Like, is this good or is it bad? If you're talking immediate term, the only thing you're talking about is the delta between 56 billion and fair value. And that delta could move in either direction. Similarly, a lot of people have said, man, GameStop, here's what you're also forgetting, Jeremy, or Budget, if that is your real name. GameStop has $9.4 billion in cash and equivalents. So if they spend $8 billion, then that means you also have to deduct $8 billion from GameStop's side of the coin. Right now, GameStop's a $10 billion market cap. So if you take $8 billion out, then actually GameStop's only a $2 billion company. And if they're only a $2 billion company, then that means we're all screwed, and Cohen's the son of the devil, or at least a nephew, because 10 minus 8 is 2. Jeremy, that's the math you forgot to do. It's interesting, though, because the same people, when I proposed, hey, what if eBay's the Kansas City Shuffle. The gist of this video was, what if GameStop took that cash and instead of putting it in eBay, they put it and bought their own shares with it? And what if they triggered a squeeze? The same people that don't want eBay loved that idea. But guess what GameStop would be doing in that case? They'd be spending $8 billion. So why do you think the stock would go up? Wouldn't it go down to 2 if you spend $8 billion in cash? No, you're just trading assets, which, by the way, you guys have been begging Cohen to do for 84 years. Why are you sitting on all this cash? Right? Why don't you do something with it? Budget for life. How can you value the asset management business? They're never going to deploy their cash. It's just going to stay cash forever. This isn't a real business. There's no assets being managed. Well, guess what? If you take $8 billion in cash and you trade it for $8 billion in equity, then your market cap is the same. It's the same. Now, the only change happens with the delta between what you paid and what people think it's worth. If you take $8 billion out in cash that was earning 3% interest, and now you own $8 billion worth of eBay that is up 62% in the past year. Let's say it slows down and it only goes up 15% from here. Well, which one is earning you more money, 15% or 3%? If you had $8 billion and it could grow at 3% or it could grow at 15%, which one is better? It's not a trick question. Growing at 15% would be better than growing at 8% or 4% or 3%. GameStop right now at 10 billion, how much cash, how much are people valuing their asset management business publicly? Not at all. Why? Because all their cash is sitting in cash. The second that GameStop deploys cash, then there can now be an analyst landscape, an investor landscape, and most people will probably say, hey, on a risk-adjusted basis, this company became more valuable. This company just became more valuable because they now own an appreciating asset that also might be hiding some pirate treasure in the dirt. There might be some oil rights under their land. Right? It might be worth more than what they paid for it. Now, of course, people on the bear side are going to say it's worth less than what they paid for it. What's going to win out in the long run is the return on investment, right? The money they actually make with the thing that they bought. So big takeaway here that I am pleading with all of you is if GameStop spends $8 billion, they take one asset out, but they also put a different asset in. If GameStop borrows $20 billion, they have a new liability. So liability is up, but also they have a new asset. Asset is up. So the same equation we were just working with, hey, your cash was earning 3%. Now it might earn 15%. Which one is better? Which is a better use of the cash? When you add debt into the equation, there is a level of risk, which we will dive into here. But it's a similar equation And it just comes down to what's the cost of the debt. And we don't know that yet. We don't know what the debt will cost. But let's say the debt costs 5%. 5% is the interest expense on the debt. If they borrow $20 billion, that is costing them 5% a year, and then they buy something that is appreciating at 15% a year, is that a good decision or a bad decision? Well, you would generally say good. The main question being, can they afford the payments? It's similar to, again, the house example, because I think most of you guys understand this, even if you are renters for life. If you were an investor, if you were, let's say it's not an investment. Let's say you are just placing some bets on your favorite gambling app. And you could pick, horse A or horse B, except one horse is named John and he's a human. And the other horse is named Jeff and is also a human. John has $100K in cash, period. Jeff has $500K worth of house, 100 in equity. So they have the same net equity. Who do you think will end up with a higher net worth 20 years from now? Who will have the higher net equity? Who will have created more value? And let's say they're putting money away at the same rate also. So Jeff is paying for his mortgage. His mortgage is $2,000 a month. Let's call it $5,000 a month. Who cares? Jeff's putting $5,000 a month towards his mortgage. Some of that's going towards the cost of interest, but it's the same $5,000. John, Jeff owns the house. John has $100K. John is putting $500K away into his savings account every year. So John, $500K into the savings account. Jeff, 5K in the savings account. Jeff, $5K to pay off his mortgage. Who do you think will end up with a higher net worth in 20 years? Jeff Jolly says, me. Sorry, Jeff. Your Jeff starts with a G, but this Jeff starts with a J, so it's not you. Unless you want John to also start with a G. Let me think about this for a second. Let's do this. Here you go. Future value of investment. Let's blow it up a little bit. 100K. It's growing at 3%. You're putting in 5K a month. In 20 years, you have $1.8 million. Congrats to John. 100K, 3%, 500K, 5K going in there. Boom. If you have 500K in assets, and you are putting in, let's say it's only $4,000 after the cost of interest, but that your house is appreciating, what do you think? 5% a year, you end up with $3 million. There you go. Very simple example. But the person who owns 500K of assets that are appreciating is going to run laps around the person who has cash. Let's take a brain break for a second. Let it all sink in. Burgess and Lizard said, so we should still end up around a $40 billion market cap since we're getting a $50 billion asset with $20 billion finance and GameStop's $10 billion. Okay. Thank you for that comment, because it means that I am still not getting through to Earth. What about pirates in West Texas? Do you not understand? Think about it this way. If eBay borrowed 20 billion and bought their own stock with it, what do you think would happen to the stock? If eBay borrowed 20 billion and bought their stock with it, what would happen to the stock? If you think that the value of the company would go from 50 billion to 30 billion, then I think you are insane. Probably it would go up. It could stay the same. It could stay the same because some people are going to value, like, the questions still come in. How much is the debt? Can they afford the debt? What did they buy? Did they buy it at a good price? What's the value of what they bought? What's the bankruptcy risk associated with the debt? And then what is the valuation of what they bought with the debt? But probably most people would look at that as a very bullish indicator. If eBay borrowed 20 billion and bought their shares with it, most people would view that as very bullish. They'd say, oh man, eBay management, who knows their business as well as anyone, thinks that their stock is that undervalued that they are willing to even pay interest expense to scoop up as much of their stock as possible. It's saying, hey, I will take on a liability, which is debt, but then I will also add an asset, which is a company. It is, Lizard says, I don't think a company borrowing money to buy an asset versus borrowing to buy their own stock is a good comparison, though. So this is a hard disagree from me. A company is an asset. Think about the house example I gave earlier. If you borrow $400,000, you buy a house that's $500,000. Let's say you don't put any money in. Maybe that's making it confusing. If you borrow $500K and you buy a house with it, what happened to your net worth? In the moment, nothing. Literally nothing happened. What happened to your opportunity? It went way up. Because now you control 500K of assets. Your upside is way higher. Your downside is also higher. What would create the downside? Again, if a dragon breathes fire and we're in Armageddon and no one sees any value in, like if what you buy becomes worthless, then you lose the game. That's one way you lose the game. You buy something that's worthless or worth much less than what you paid for and will never recover. The other way you lose the game is you can't afford the debt.
Market data connection lost.
If you can't afford the debt, you lose the game. If you buy something that's worthless,
connection reestablished.
You lose the game. If you can afford the debt and you can appreciate the asset, then long term, you're in a much better position than you were before. Burgess says he gets it now because they still own the stock they buy, so the net equity stays the same. Correct. 20 bill in debt, 20 bill in stock. It's the same thing as eBay buying their own stock, because what you're looking at is GME plus eBay becoming one. Married in the church. And then as one company, they decide to borrow $20 billion to buy their own stock. And then they decide to use $8 billion in cash to buy even more of their own stock. The combined company is exchanging $28 billion in cash for $28 billion in equity of their own company that they then own. It's called treasury stock. It's shares of the company owned by the company. So they are getting an asset in exchange for the liability, and their conviction is that the asset would be immediately worth more than what they paid. But if not immediately, then certainly soon would be worth much more than what they paid. Think about buying a flip house. You paid $200K for this horrible house. What's your plan? I'm going to renovate the house. It's going to cost me this much to fix it. But after I fix it, I'll be able to sell it for this much, which is more than what I paid plus what I spent to fix it. So net, I've created value. Argent Per, you might get suspended here. I might put you in timeout. If he's accusing basically Cohen of he's buying stock to just try to exit or whatever. I covered this very thoroughly in this video here. What you're not seeing about the $2.5 billion share or 2.5 billion share authorization. It is impossible for Cohen to do that. I mean, he could exit if he wants to, but he would be giving up his entire, he'd be giving up 30 plus billion in compensation if he did that. So doesn't make sense. Also, you're saying when that happens, when they buy their stock, what happens to earnings per share? Earnings per share goes up. So it sounds like you're actually bullish on the idea, except you said that it's manipulating earnings per share. Yeah, it's a manipulation. It's all a manipulation, Argent. This is Ryan Cohen's manipulation to acquire eBay at a discount and add extreme shareholder value to GME. That's the manipulation, Argent. If you're not here for it, I don't know how to help you. Lizard says, I also want to make it clear I really appreciate you taking the time and not trying to be argumentative. Thanks, Lizard. Oh, you said earlier, if a house is worth $500K because it's able to generate $40K a year in rental profits, is the market still going to value it at $500K if the financing for the house costs $35K a year? It's a great question, and the answer is yes. The answer is yes. Because someone else could buy the house in cash. Right? Just because you personally owe money on the house doesn't mean that someone else would have to owe money on the house. The house is still worth $500K, even if you're paying $100K a year to finance it. Now, if you're paying $100K a year to finance a house that's only worth $500K, then you are an idiot. You're probably not an idiot. You just made a big mistake. And you should sell the house as soon as you possibly can because you cannot afford $100K a year in interest. And even if you could afford it, it's a very inefficient use of your income. But if you can afford it and it's a relatively efficient use of your income, then yeah, the house is still worth the house. And by the way, this is what your kind of house hackers and real estate landlord people do all the time. Often they're looking for a house that just breaks even. Can I get a house that and rent it out, and after the costs of the interest plus any other expenses to maintain the house, can I get the renters to at least cover my mortgage? A lot of times that's called a house that is cash flowing. And when your house is cash flowing, generally speaking, you're pretty happy as a landlord. There are, however, some real estate markets that are so hot, so desirable, that you can't get a house that even cash flows. Often, you are buying a house, renting it out, and your rental income might pay for 2/3 of the cost of your cash outflow, but 100% of your cash outflow, or let's say 80% of your cash outflow, is building equity in the house. So even though the house isn't paying for itself, the rental income in that example wouldn't be paying for itself all the way. It's still paying for more than what you're paying for. So you are still net owning and controlling more assets than you would have been able to otherwise. And then the question is, can you afford to fund the difference personally? In this case with GameStop, you're looking at a company that will cash flow. You're looking at $20 billion in debt that will cash flow. The earnings of the company, the rental income of the house, will pay in excess of the mortgage and the interest and the maintenance. Which we'll break down here with numbers soon. I'm trying to explain it conceptually so then you guys can see it in the numbers as well. But the key answer to that question, though, is yes, the house is still worth $500K. So let's say GameStop buys eBay, and then eBay is not cash flowing. The cost of interest is really high, and the company is doing really poorly. Is eBay still worth 50 billion? Yeah, eBay's still worth 50 billion. It's kind of like let's say, like the question, if you're tracking with everything I've described so far, then the question becomes, well then why doesn't everyone just borrow $20 billion and then go buy $20 billion worth of assets, and then they can be rich? And the answer to that question is because they can't get approved for $20 billion, first of all. Second of all, they don't have the stomach for the risk. Thirdly, they can't afford the interest payment on 20 billion in debt. You know what most people do end up doing? Borrowing every dollar they can. How much house can I get? If you are, which by the way is not a really, that's not the only thing you should be thinking about if you're going to buy a house. But when you're thinking about your future net worth, when you're thinking about building equity, that does lead you down a path of how much leverage can I get my hands on? If I was a 20-year-old that bought a, $20 million house in, Pack Heights in San Francisco, I'm probably, and let's say I put no money down, I'm probably going to end up with more money than if I had gotten a $200,000 shack in rural Nebraska. Regardless of if I put any money down on either, if you're just solving for future net equity, the more valuable assets you can own, the better. The question, though, is how much risk are you taking on, and can you afford that much debt? So it's not how much money can I borrow, period. That's not really the path. The path is how much money could I afford to borrow comfortably, and comma, is there an asset I could own that would appreciate, conservatively speaking, comfortably above the cost of the money that I borrowed? If you play that equation, there is wealth creation 101. There it is. So the questions for GameStop shareholders is, can GameStop afford $20 billion in debt? Really, the question is, can GameStop plus eBay afford $20 billion in debt? The next question is, and the more important question is GameStop plus eBay the best, or at least a very good allocation of that financing? Will GameStop plus eBay appreciate at a faster rate than the cost of the debt that they used to buy it? Hopefully, this is making sense for you guys. Yes, Lizard said, you summed it up much better than me. Said, so the question shouldn't really be about valuation, but ability to cash flow and grow after the acquisition. Exactly. Valuation matters, but whether you pay 40 billion, 50 billion, or 60 billion for eBay does not matter at all compared to what are you going to grow GameStop plus eBay into? And of course, how long does it take to grow there? And what's the burn rate? What's the cost of that debt? And is the pace of the growth, even if things don't go as well as planned, is the pace of the growth outpacing the cost of the debt? And if it is, that's wonderful. Argent Per, I'm officially putting you in timeout. 10 minutes for you. Argent Per has not seen any. What's up? What's up, McCarran? Argent Per has not seen any investing prowess from Ryan Cohen, despite having built a multi-billion-dollar company from nothing in Chewy, a multi-billion-dollar company from nothing in GameStop, and passive investments that have appreciated substantially in Alibaba and Wells Fargo and Nordstrom and BBBY and Apple. The bigger question is, can you find an investment failure from Ryan Cohen in his whole tenure? Has he made a grave investment mistake? I don't think so. Let's dive into the affordability of the debt. At a high level, $20 billion in debt. Here, let's come over here, and we're saying how much debt can the company afford? Or let's put it this way, like, how much will 20 billion in debt cost if the interest slash rate is, here we go. So let's go, we want to go percentages here. What's the highest interest rate you think they would even consider? 10%? And then what do we want to do with this formula? We're looking at 20 billion. There is 20 billion, right? Yes, times D85. So you're looking at 2 billion per year in interest expense if they're taking debt at 10%. And is there any reason we should adjust that down? Probably not. So then the question is, eBay, before any changes, before Cohen fixes anything, this most recent year earned 2 billion in net income. That's after tax and everything. GameStop earned another 418 million in net income, but hypothetically, all of this interest income would also go away. So 418 minus 140, because they'd be spending that cash on eBay shares as well. That would put you at 280 million in net income from GME and 2 billion in net income from eBay. You put it together, and if they are paying 10% interest on all of their 20 billion in debt, they only have $200 million, $300 million of cushion. And that's just paying the interest. Cohen has already shared in his interview with the SF Bros, TBPN, that he wants to aggressively pay down the principal. And Larry Chang has posted on LinkedIn or X before, one of the grave mistakes that entrepreneurs and founders make is calculating whether or not they can afford debt based on whether they can afford the payment, afford the interest. When the reality is, what he encourages is that they should be looking at, can they afford to pay back the principal? If 20 billion stays on the balance sheet forever, it's not a good sign. Going back to the mortgage example, banks force you to pay down the principal. And it's either a 15-year or a 30-year term. The longest they want to let that go is 30 years. Cohen doesn't even want to let this go 30 years, but he definitely doesn't want to let it go longer than 30 years. So at 10%, they can't afford 20 billion in debt. What would that mean? They would have to secure terms. It means that they are definitely securing terms better than this. So that's good news. What could the terms be that they are securing? Oops. What could they begin to consider from an affordability perspective? Let's look at 8%, 7, 6, 5, 4, 3, 2. There's your annualized interest expense based on the interest rates they might secure. Now, can they get 20 billion at a 2% interest straight up? No. If they're getting terms at 2 or 3%, it's because they are convertibles. These would be convertible type debt, which I will just call purple. I don't know. More shares ultimately would get issued down the road at higher conversion strikes for a pricing still be determined. Most likely, Cohen's not going to do a ton more of the convertibles. I don't know. It could be half and half. He might do half convertible, half pure debt in order to entice enough financing to come along. But even if he did 20 billion at an 8% interest rate, which I think he would be able to secure under current interest environments, that's 1.6 billion in interest expense, which means that he would have 4 plus 3, about $700 million per year that he could be putting away towards retiring that 20 billion in debt. And that's, again, before any improvements. The reality is GameStop's going to make more than 280 in operating income in 2026. And if GameStop owns eBay, eBay is going to be doing more than 2 billion in net income. But you don't want to take on financing that locks you in to growth you haven't even achieved yet. You know what I mean? You wouldn't want to be that aggressive. When you're thinking, it's kind of like buying a house that you know you can't afford and then saying, no worries, interest rates are going to come down any month now, and then I'm just going to refinance. I can't afford this, but I could survive for 3 or 4 years, and then I'll just refi at a lower rate. That is way too dangerous of a way to run a company. There's no way that's what Ryan Cohen's going to do with GameStop purchasing eBay. So all that to say, why doesn't GameStop just pay for the whole thing in cash? After all this talk I've done about, hey, the more debt you can leverage, the higher your future net equity is going to be, assuming that what you're buying is an appreciating asset and that the rate of appreciation is higher than the cost of the debt. Well, the reason is because they can't afford to. They can't afford to take on much more than 20 billion in debt. And the more they take on, the higher the interest rate would be on the debt that they are on the payoff, because the more risk there would be for the lender. So if, let's say, eBay ultimately gets acquired by GameStop, but let's say similar to whatever, Paramount buying Warner Bros., that they want an all-cash deal when it's all said and done. So what happens? Basically, that guarantees that a lot of that cash is going to be convertible. They're not going to pay 56 billion. They're not going to borrow 50 billion in traditional financing. They're not going to. Now, if they were at 30 billion, and you crunch these numbers again with the 30 billion number, basically that knocks out really pretty much all of these. If they were to borrow 30 billion in traditional financing, the most they could really comfortably secure, well, to comfortably secure 30 billion in traditional financing, they would have to have about a 5.5% interest rate. Can GameStop get a 5.5% interest rate on 30 billion when T-bills are paying 3 point something percent and rates might be trending up after a very hot inflation report this past week? Possible, but there's no way they can get 40 and afford it. You see what I'm saying? If this number is 40, again, they can't afford 40 billion in traditional financing. The most they could afford is maybe 30, but there's a reason why they ended up with half cash, half stock. Right? So what does that mean if eBay rejects the equity portion of GameStop's offer? Then it means that it'll be quote unquote an all cash deal, but at least 20 billion of that cash will be via convertible bonds, not true cash, but dilutive cash. Does that make sense? Let me catch up here on the chat a little bit. What is up, guys? Spoon says, fan of Budget for Life forever. Halo Sub Club reppin'. Let's go. Let's go. Halo Sub Club. Shout out. Shout out to the Halo Sub Club. Baby UFO says, if GME buys eBay, the deal was already rejected. Then why are you here, baby UFO? Of course the deal was rejected. It's all part of the plan. I've said it in my past several videos. I'm sure you've been watching them. Surely you haven't just been dropping by, leaving bearish, relatively sassy comments and not actually watching the videos. It's called a hostile takeover for a reason. It ain't really that nice. What else on this debt conversation here? Yeah, Ignite says Ryan's taking eBay whether eBay board likes it or not. Kip Wolf said, what did I miss? We're talking a lot about debt. A little bit of 10 at the beginning of the video. Now we're talking a lot about debt. Some people think that when you borrow money that your net worth immediately drops. And that is not true. If you buy an asset, then your net worth stays the same. Baby UFO says, I was curious. Yes, I've been watching. Hey, thanks. I appreciate it. Also, if I'm ever too sassy with any of you guys in the comments, I do appreciate it. Or sorry, I appreciate y'all being forgiving. I have, like all of you, been seeing a bunch of FUD over the past few days. It's been a little bit harder for me to differentiate who is obviously a bad actor versus who has genuine questions, because there are a lot of genuine questions with something this substantial, like a $10 billion company trying to acquire a $50 billion company. So my apologies if I have responded to you with what felt like too critical of SAS, thinking you were a bad actor when actually you just had a question. But to answer your maybe question, baby UFO, GameStop is going to try to sway shareholders to outvote the board of directors. So it doesn't really matter that the board of directors rejected the deal if GameStop owns 51% of the company. Not GameStop alone, but GameStop plus friends of Cohen, friends of GameStop. You're not rude, baby UFO, but appreciate the apology anyways. Bubbles says, I love when you give a little sass. Thanks. Thanks, Bubbles. So the financing is going to be hopefully something like 5 or 6%. If it's all the way up to 8%, they're still chill. If they finance at 8%, that 20 billion, and they take on 1.6 billion in annual interest expense and spend 8 billion in cash. And so now they've also forfeited 140 million in annual interest income. If all of that happens, even if GameStop doesn't improve any more from here and eBay doesn't improve any more from here, they would still have a $700 million cushion annually in terms of covering their interest, covering their payments. 700 million is how much more than 1.6? 43% higher. So if you were to think about this in the house analogy, this would be like saying, hey, I can afford a $1,400 mortgage payment. I know that's too low for most mortgages, but that's the only way I can do the math quickly in my head. Call it $14,000. I can afford a $14,000 monthly mortgage, but I'm only going to pay $10,000 in monthly mortgage so that I have cushion. If you could afford $14,000 a month and you only committed to $10,000 a month, do you think that triggers risk? Assuming also that you feel that the house you're buying is deeply undervalued. You think you can quickly improve the valuation. You should probably be able to refinance down or increase, right, the income potential of the house that you're buying. The rental income is about to go up. The house that you already own, the rental income is about to go up. Is that enough of a cushion to feel safe? If not, how much more cushion would you need to feel safe? It's probably going to end up closer to 6. And I bet even this 20 billion, some of it might be convertibles. Cohen really is pretty debt averse. I don't think he wants to push the limit on how much company he can afford, but he is, because he really wants eBay. But what I'm trying to say is if the interest rate he's securing gets too hot, I think he would offer some convertibles to lower the interest expense to maintain affordability. I don't think he wants to get anywhere close to a bunch of press saying GameStop's not going to be able to afford their payments. They're underwater on their mortgage that they took out to buy eBay. They're underwater already. And eBay's going the wrong direction maybe the first couple of months because he's paying off all these executives to get out of the way. I don't think he wants those types of headlines. Personally, the downside, though, is the more that he prioritizes affordability, the more that potentially some more dilution is already baked in down the line. However, we have some pretty incredible assurance from their proxy, right? The GameStop authorization vote that they posted a couple days ago. This statement offers some amazing assurance because they are only authorizing a total of 2.5 billion shares, which means that the dilution pricing is not going to be any worse than about $20 a share on the GameStop side. And that also would mean that there's not going to be very much dilution as far as convertible debt is concerned. They're basically diluting, like where does the half cash, half stock come in? They are diluting as much as they can. They're borrowing as much as they can afford traditionally, right? How much can we just buy? Because we just want to buy it. If they could afford to buy it all cash, I think they would, but they can't. They can only afford about 20 billion in debt. They have 8 billion at their disposal, so they can only afford about 28 billion in cash. So that's where the rest comes in. That's where the equity comes in. But they are guaranteeing that their equity does not get screwed in the process because they're only authorizing up to 2.5 billion. So if the pricing happens at $15 a share, guess what? The deal doesn't happen. They don't have those shares authorized. They would have to do another vote, which is not going to happen. You know, like they would just pivot at that point if it really came down to that. All that to say, hopefully I'm helping further the debt discussion a little bit. Adam says, I've got a fever and the only cure is budget for life. Thanks, Adam. Yeah, Punky said that in one of his interviews, he said his plan was to pay down debt as fast as possible because he wasn't interested in running a highly levered business. Indeed. Let's go. Between sandwiches. Hey, thank you so much for the super. Between sandwiches says, one thing is for sure, with all the events / press, GME is in the collective consciousness to a very high degree, maybe even 2021 levels. I hope the math, as you've so eloquently presented, is proselytized into a yes vote. Well said. Well said. Let me heart it and like it. Thank you, Between Sandwiches. I am absolutely voting yes. And I do agree with your comment. Like the eyes on GME right now is pretty wild. I mean, the amount of interview Cohen's done more interviews in the past 10 days than he has in the past 6 years combined. Genuinely. That's not even an exaggeration. That's wild. And the more that, like, I think he just baited CNBC into blasting his name, right? Doing that horrible interview where he's being sassy to get everyone talking about how stupid he is, so that then he can actually give 5 banger interviews right on the back of that, and then amp up the press in a negative type of attention I know that I can get. Let me bait all the negative attention I can get, flip it on its head, and turn it into incredible momentum. You know, even like these eBay listings are such a good example of. What's up, Tim? Moth and Baby UFO are also voting yes. Baby UFO says, I'm confused. Why 2.4 billion shares when only 1.2 is needed at current levels? Between Sandwiches says, yeah, also with the Roaring Kitty stuff, the timing is just too odd not to be coordinated in some manner. I agree. Yeah, the eyeballs are coming. The pressure's building. Cost to borrow on the warrants has never been higher. And eBay, ever since they declined, they came out and said, we're not going to do the deal, right? That was, I think, May 11th. When was it? I don't know. eBay's rejection. Somewhere in this range, around 107, eBay says, hey, we're not going to do it. Wink, wink. Since then, they're up another $7 a share. So it seems to me like the market is potentially beginning to price in that this is going to happen, and or that shares are being bought up by people that are about to vote yes, force a proxy war and vote yes for GME to acquire eBay. Seems like it's very much in the end game. and that response from eBay's board gave the green light to GameStop side of the coin to commence the hostile takeover. So back to your question, Baby UFO. Why 2.4 billion shares when only 1.2 is needed at current levels? So basically, because 1.2 is needed at current levels in addition to what's already issued. So this is how much extra dilution is required, but they already have $822 million shares approved. There are authorized shares. They have 1 billion shares authorized, 822 million approved, but currently only 447 issued. Still, they've already approved 822, which means they only have 150 million shares left to be able to approve. And when you are looking at purchasing eBay, if you think you're going to get away with paying eBay $28 billion and only having to create 150 million shares in the process, you are looking at GME shares trading at 180 a piece. So is that possible? Could we see a squeeze to 180 that then only 150 million shares are actually paid to eBay? I mean, that would be awesome. That would be epic. That's what I'm rooting for. I think that would be so funny and very enriching for GME, because at that point, GME would actually end up owning 80-90% of the combined company. It'd be wild for that to happen. But you need to approve 2.5 billion shares. You need to authorize them so that you don't look insane coming into the deal. Like eBay can say, I don't think there's a way for this to work financially because of this discrepancy. For this to work financially, the way GameStop presented it, they would have to issue 1.2 billion more shares, and they are literally not allowed to. So GameStop needs to approve this authorization so that eBay can then ultimately accept the deal, even if it goes proxy war and you go shareholder, like the shareholders voting yes. It really can't happen until GameStop can say with plausible deniability, yeah, we've authorized 2.5 billion shares. So yeah, if we need to issue 1.2 billion to come up with that 28 bill in value, no problem at all. Let's get the handshake, wink, wink. Okay, pricing date is this Friday from 2 to 3 p.m. Okay, green light, internet. Rally the stock like crazy. How high can we get it on the pricing date? And ultimately, we're only going to maybe end up issuing 100 or 2 or 300 million shares, but you still need to have this authorized to basically to lubricate the deal and ensure that it goes through successfully. And even if the pricing is at $20 a share, I still think the deal is certainly enticing on the GME side of the coin. Hopefully that answered your question. Jay Card says they can't vote April 20th record date. Are you referencing the GameStop vote? The June 8th annual shareholder meeting for GameStop? Is that what that's in reference to? Some Grady says the eBay auctions end soon. Thanks, by the way, thanks for the additional super, J Card. Seriously. 23 minutes left. 2:58 p.m. Is it any coincidence that he stopped posting right freaking before the last one would end at 2:58? He got one up at 2:50. 3 minutes later, he got one up at 2:53 a week ago. This one took him 5 minutes. Got one up at 2:58. He said, "Do I have time to do one more?" Oh, no, I don't. Why don't I? Because it wouldn't post until 3:03. We don't have time to wait. We don't need anything expiring at 3:03. We need everything to finish before 3 p.m. Central. Because what if we're about to see an announcement in 25 minutes? I don't know. Probably not, but regardless, it was about time for me to hit up a stream anyways. Oh, so Jay Card saying that April 20th record date is for the eBay shareholder vote. Yeah, so they can't vote, but like it would have to be a new vote that shareholders would have to demand. Which I wonder if there's like a specific process for, like what percentage of shareholders are required to force a company proxy vote. Oh, in the official proxy statement, just 1%. What if I didn't put the word proxy in there? A special vote. There you go. 10 to 25%. Okay, so it depends on the company. What is it known for eBay? Versus a company's special vote for eBay. It's probably not public. Oh, there you go. It's 20%. There you go. If this is right, I haven't fact checked this. I haven't been that curious on the exact percentage required because it's been pretty clear from Cohen's interviews that he's going to do, quote, whatever he has to do. Right. But outside of a special vote, they would have to wait until next year. So to force a special vote, they need 20% ownership of outstanding shares. Now, 20%, it's 20% support. So it's not 20% has to be owned by GameStop specifically. It's just 20% support. So can GameStop plus other benefiting institutions get to at least 20%? And in reality, if they force a special vote, they would want to own more than 20%. Ideally, you would already know that you have at least 51% voting for GME. You would already want all of those seeds already planted. But you would need at least 20 to bring up the issue. But if you fail, right, if you push for the vote and then you fail, now you have to wait probably a year. You probably have to wait until the proxy or whatever to re-vote. So what percentage does GameStop plus Cohen's friends, what percentage do they lock up before the vote? I don't know. And then what percentage of shareholders do they try to sway for the vote? Because whatever the delta is between 50.01% and whatever they own, that's the amount of people you need to convince to vote for you. Vippy's saying, like, what does the literal process look like? I mean, I'm not like that. The power to call a special meeting. The shareholder can call a special meeting. There are two ways to do it. Written consent. Call a special meeting. Special meeting provisions. It seems pretty much like you just, when you own enough of the company, like you just freaking walk into the headquarters and say, give me my company. Like, I think once you have the threshold, then it just becomes like an email in everyone's like brokerage accounts. And then they just, whatever, here's the voting dates and here's the thing and special vote. Here you go. It's true that eBay has a lot of institutional ownership, but there's no reason, like they're publicly traded, you know? Anyone can buy. And by the way, some of those institutions are probably selling. They're up another 15%, 40% over the past 3 months. Some of them don't think an eBay deal is going to go through, or they don't like the risk reward at this threshold, right? Even if a deal does go through, there's only 10% of upside left. It's publicly traded. So who has owned eBay historically does not limit who can own eBay moving forward. And hypothetically, 20% of the company is literally $10 billion. 10 bill. So Cohen plus GameStop, right? If Cohen invested his personal money and then GameStop invested their money, they own more than 20% before a single institutional partner even comes into the mix. You know what I mean? Currently, it takes 20% of all shares outstanding to call for a special shareholder meeting. Man, people have been trying to gain control of eBay for a long time. There's been a lot of people frustrated with eBay's ownership. To guard against the eBay board of directors becoming complacent during the current eBay stock price slump, shareholders need the ability to call a special shareholder meeting to help the board adopt new strategies when the need arises. Look at this. These are frustrated shareholders from 2024, 2025, and people voted for it. Look at this. Shareholders ask our board to take the steps necessary to amend the appropriate company governing documents to give the owners of a combined 10% of eBay outstanding common stock the power to call a special shareholder meeting. It looks like maybe this failed. 49% voted yes. Look at that. eBay owned substantially by institutions still barely warded off this vote to reduce the threshold from 20% to 10% to call a special meeting. They barely lost this. What does that mean? It means that some of the institutions that hold eBay want a different owner for eBay. It also might mean that some of eBay is rehypothecated and that actually retail is a larger percentage of the eBay shareholder base than you think. Regardless, 20% is not too high of a number for GameStop to reach. They're not going to want to call the vote, though, if they think they only have 20%. So how long does it take them to build enough of a position and build enough public interest to get the support that they feel like they need for a vote to be approved? That's really that's really the question. But whenever they issue a vote, this has to be 50.01% in favor. So 49% voting to approve does not get the deal done. That's why it's still 20% required, not 10% like this group was pushing for. Interesting, though, to think about. This group might have been Cohen. It wasn't Cohen literally. Like you can see, this is the organization name that filed this thing. It won't even let me look them up. From SAU, Kustosakstabank Gestion. But once you have 20%, you can call a special meeting. Once the special meeting is called, oh, we already looked at this. Then people vote. The votes are tallied. If the votes are at 50.04%, then the deal goes through. What's up, Burgess? Burgess says, whoa, this is some news. Zachary Meek, great to see you. He says forward purchase agreements for call or put pairs are not required reporting, so they could have triggered multi-prime strategy to accumulate 50% plus by this week. Yeah, they could have beneficially more than 50%, but you'd have to exercise those options to vote on the shares. But it's true. They could be building their position through derivatives to lock in their buying price rather than just buying and buying and buying on the open market. They're probably buying a lot of calls so that they know once they exercise the calls, they have the control. I do agree. Forgot my password. Says if GameStop can get 51% of eBay, does that save them $30 billion because they don't need to buy the whole company? No, not exactly. It just means they can vote for the approval. Technically, like GameStop pays the $30 billion to eBay, but then GameStop owns 50% of eBay. So then GameStop's paying GameStop to merge. But you're not really saving the money because you still had to spend the money. But you're not spending the money. You're buying an asset with the money. So in a sense, yes, you're correct. They have to, like, they are offering to pay eBay shareholders $28 billion in cash, $28 billion in stock. But if they make themselves 50% of the shareholders, then they benefit 50% of the stock in cash. So, but they had to spend cash to get that position in the first place. So you're doing the same thing. Ultimately, you still are out 28 billion in cash and 28 billion in stock, and you get a combined company. Punky says, Jeremy, check out the votes for reapproving the board members from their last filing. Those numbers definitely suggest this board is out stable. Nice little dump on the shares heading into market close here. Yeah, I mean, the board is not very loved. Like I don't have that off the top of my head, but I don't think GameStop needs to even own 51%. Like, even if they only owned 35%, between them and institutions that they know will vote for them, like, that's probably enough. Hey, Forrest from Roseville, California. Thanks for the love, Burgess. Yeah, Zachary says majority control makes it impossible to override GME. It's true. They win. If they get majority control, it's over. Guitar Hero ends in 2 minutes. It's true. Let's see if we get some news after hours. Let's see if we do. Let's see if we do. Wow. It's going to extend this. Like, Guitar Hero, don't put in your last bid now, okay? We want this auction to end so that we can see what happens after hours. Thankfully, hours comes either way, but still. I don't want to get into too much right in this exact moment, but I do kind of want to put a bow on the debt conversation and any questions surrounding that. Also, kind of the equity side of the coin to help people kind of understand, hopefully finish any misinformation on that regard. And then the question, of course, that a lot of people are interested in, and what happens to the stock immediately after the deal closes, which is, of course, much more of a shot in the dark. The more important part is, that if they tank the stock, it could only be after the deal closes. If they tank the stock, it'll just be an uncomfortable bump in the ride. They are not going to get diluted at tanked prices. They can't. They cannot, which is awesome. If after dilution is priced in, they are tanked, you wouldn't really expect that, because after dilution's priced in, now you're S&P 500 eligible and you're up and to the right. There's just a lot of buying pressure that then comes in. But I would be buying that dip for sure. But some of the remaining questions become like, what is the value market value of GME plus eBay? And then how many shares are ultimately in the float? And that's going to determine what happens to your share price. How you value eBay is very, very important. We've been talking about the house analogy throughout this live stream. And one of the best questions was asked earlier, which is, what if the cost of financing a house is $35K a month or a year, and the rental income on the house is $40K a year? Does that mean the $500,000 house is worth less because of the financing? And the answer is no. It is not worth less. So even if in the short term, the combined company makes less money because of interest expense, it does not mean that the combined company is worth less. A rental property, just because you decided to take on a bunch of debt to finance the property, that does not mean the property is worth less. The property is worth whatever someone else is willing to pay for it. And if someone else has the cash and they don't need to take on any debt, then they would pay the same $500,000 for that $500,000 house. So the big question that matters the most, once you know that they can afford the debt, however much debt they take on, can they afford it? That was a big topic in this live stream. The answer is, as long as they're at an 8% or less interest rate, yes, they can afford it. Probably Cohen's going to target something more like 4 to 6%. So they can definitely afford it. Does that $1 billion in interest expense then bring net income down by $1 billion? And so now their earnings is cut in half. And so now the valuation of eBay is cut in half because the PE ratio is going to stay the same. No. Just like, by the way, just like I have not been valuing GameStop on a multiple of their interest earned. I have not been giving GameStop a multiple on their interest generated from their cash. You also would not penalize GameStop plus eBay on a multiple basis for the interest expense on their debt, because that's their debt. It's not the debt of what someone else necessarily. If someone else bought the company, they don't have to inherit the debt, they can just pay for the company. Just because someone else over leveraged a rental house doesn't mean that the house is worth any less than it was before. What's up, Carl? Yeah, I'm wearing my nightclub on a yacht shirt today because that's the kind of mood I'm in. I forgot to mention that. Tim asked, how are we doing today? And there's your question. I mean, there's your there's your answer, Tim. We're doing so good. We're on a nightclub on a yacht. I've never been on a yacht or a nightclub, in a nightclub. But I do own this shirt, which means I'm ready. It means I'm ready. 2:59 p.m. What's going to happen? Probably nothing, but we'll give it a few minutes. And then we'll kind of talk about market cap and then valuation, so that hopefully everyone is on a similar page out there in the interwebs. It ended. Okay. The guitar has been purchased. Goodbye, Cohen's eBay. It is now 3 p.m. The market has closed. And we're hanging out together, wondering if anything happens. And then we'll finish talking about a little bit of GBay, GME Bay. So y'all go off in the chat if I'm missing anything crazy, because I'm really interested to talk GME Bay. I'm really interested to keep talking about it. But if I talk about it, then I got to be over here. So if I go over here and keep talking about it, will y'all let me know if it's running? Can y'all handle that for me? Oh, there's a little bit. Man, I'm so easily pleased. You know, like, look, we went up 2 cents after hours. We went up 2 cents after hours. Coming to you live. We're up 2 cents after hours. That's funny. Someone in the BBBYQ community made a Guitar Hero post with the Sultan holding a guitar. Oh, and they made that post on March 20th. That's interesting. I mean, I don't know how in the world they would know that Cohen was going to list Guitar Hero for sale. There's no way they would have. But could Cohen have been referencing that person, making that his final eBay auction to give a tip of the hat of, hey, the Sultan will be involved in financing? Why? It doesn't really matter who's involved in financing. It's not more bullish for GME if financing comes from a Sultan versus a traditional bank, you know. What's up, Zeji? He says, thanks for being my go-to podcast while I'm working. Okay, let's talk combined entity. And y'all just let me know if I'm missing anything big on the stock. The market value of GME plus eBay. If you want to watch this video anytime soon, eBay fundamentals and value, if GameStop acquires them, then you'll have a decent estimate of how I value eBay near term. Now, I really probably should save for a separate video, how does the combined holding company, how does GameStop stores help eBay? How does owning GameStop help eBay? Is there any way that eBay is more valuable being owned by GameStop than how they have historically been valued? I did dive into that a decent amount here on this video, if you want to look into it. The other side of the coin, though, is how is GameStop more valuable if they own eBay? Which, if you want to watch this video, what you're not seeing about GameStop buying eBay, conceptually, that's a really big part of my bull thesis for the combined entity. But that matters when you're talking about what's the market value Because GameStop has a software business and a hardware business and a collectibles business. They also have power packs. Well, if GameStop owns eBay, is there any way that their businesses would be valued differently? From a floor, fair, and fly case scenario, would you value any of their businesses differently? Also, GameStop has this asset management business. Well, the asset management business goes away. It becomes retitled eBay. So what's eBay's value? Floor, fair, and fly case scenario. And then does owning eBay change any of the valuations for GameStop's legacy business? Or does it even change the probabilities? For example, at a high level, power packs probably becomes more likely that they achieve fly case scenarios because what's been the bottleneck for power packs? Inventory constraint. Well, if you own eBay, then you own a huge sourcing for inventory, which then increases the probability that you achieve a fly case scenario and maybe also raises the ceiling of what a fly case scenario would be. And now you go from something that might have been a $500 million business to more like a $2.5 billion business. Well, there's another $2 billion right there. It's pretty exciting. So I want to save the super granular level for a separate video because I think that's going to be more helpful. But as I have shared in past videos, if you wanted to look at just historical valuation, like not baking in anything that they accomplished down the road, let's just say you're a cynical investor. You're very cynical. You're not going to give them credit for anything they haven't done yet. Once they do it, then you'll give them credit, but you're not going to price that in. In that case, how do you value GameStop? Well, GameStop pretty clearly has been valued at about $10 billion. Pretty simple, right? 10 billion for GME. How do I? If GameStop spends $8 billion in cash, all right, here's the homework. Let's see who's been paying attention on this live stream. If GameStop spends $8 billion of its cash and they use it to buy stock in a company, what has changed about their net equity? Are they now worth $2 billion because they spent $8 billion in cash? Let's just assume they buy the equity at fair value. Nothing's changed, right? GameStop would be worth $10 billion. They're just trading an asset. No change. Kenny's intern, interesting username based on your comment, says the problem's not valuation. The problem is that market doesn't like uncertainty. And Ryan Cohen doesn't like to give guidance. Well, he did give guidance as it relates to eBay. He did actually give pretty clear guidance. Here's what he's going to do, and here's what's going to happen with earnings, and here's the timeline, 1 year. So that's actually pretty clear guidance. But to your point, how does the market value GameStop after they trade one asset for a different asset? Well, some people will like it more. Some people will like it less. Some people will like 8 billion in a company that's appreciating at 15+% a year. More people would probably like that than people that like that it keeps 8 billion in cash. More people would probably like that they're deploying the cash. So it's 10 billion, but it's really like 10 billion plus. Right? Like 8 bill in cash exchanged for 8 bill in equity. This isn't even that well illustrated. I wish I could make it clearer. Let's just save this for later. Legacy GameStop. Now we're looking for legacy eBay. Let's call it 50, which is the number I came to again in this video here. Now, if you want to be pessimistic, you could say that I think the market's going to say that eBay is actually only worth 40. GameStop overpaid at 56 billion by 16 billion. Let's go with that example first. This is the more pessimistic version, right? eBay is only worth 40 billion, let's say. Total, you now have, shocker, 50 billion GME Bay. There you go. There's your rough market cap, right? Plenty of upside. It's 50 billion. Wait, you turn 10 plus 56? You turn 66 billion into 50 billion? Yeah, maybe. That's the worst case, right? I don't think there's any reason why the market would say eBay's only worth 30 billion. But let's say they're only valued at 40 is what the market thinks eBay's worth. That means they will value the combined entity at 50 billion. The question is then share count. Let's say that the worst case pricing comes in and that 1.4 billion additional shares are created, are issued. That's the worst case. It's not any worse than that. We know now that it's not worse than that because of this proxy statement. They are not allowed to do any more than about 1.5 billion in additional issuance. Right now, they have 447 million shares, but let's say that convertibles and warrants are already being priced in. If they are, then that means 22 is really 32, but it's not actually realized yet because these convertibles and warrants haven't actually converted yet. But Cohen's compensation, we're leaving off the board. Warrants and convertibles, we think they will ultimately convert. But for now, let's go with 447, I guess, just see kind of what happens. Actually, it's just going to be a lot clearer if we assume that this pricing is priced in. This is the GME legacy share count. This is the eBay share GME share issuance to eBay. And it would be this number here. Pretty much the worst case. Could it technically be like 1.5 instead of 1.38? Sure. Then you're looking at total shares. Oh no. Of these two numbers together. New share count. GME Bay. Day one market cap. Here is the, here's the share count. So what happens? You take 50. Is that 50 billion? That is 500 million. There you go. 50 billion divided by the worst case share count. $25 a share. This is literally the worst case scenario. Worst case. This assumes that the market only thinks eBay is worth 40 billion. This assumes that the market does not increase GameStop's value due to the fact that they will be converting on warrants and convertibles. If you're confused on the warrants and convertibles, then you could run this same math using the 447 number instead of the already diluted convertibles number. And there you go. Worst case, you're at 27. Worst case, your new floor is $5 a share higher. Your new floor is right where you were a few weeks ago when news of this deal came out. That becomes the new floor. Now, what if people actually value anything about GameStop synergy, right? This is what we'll get into in future videos. What are the odds that eBay's only valued at 40, that GameStop's only valued at 10? If they combine, is there any way that legacy eBay adds value to legacy GameStop? Is there any way that legacy GameStop adds value to legacy eBay? As a result, GME Bay would then have that type of valuation. Also, what are the odds that the pricing at dilution is not $20 a share, but is 25 or 30 or 40? Right? Worst case, $27 a share. Nothing's valued from legacy as far as like synergy. eBay does not add any value to GameStop. GameStop does not add any value to eBay. They're only going to be treated as a $50 billion market cap. You just spent $56 billion, added it to 10, and you only have $50 billion worth. That's about the worst that you could imagine happening. Your share count is diluted at the maximum allowed threshold. And still, your shares are worth more than they were before. Instant equity, day one. And by the way, now you're a $50 billion company. You own eBay. You can start iterating and improving over time. You're eligible for the S&P 500. And that's the worst case. Let's just say, we'll dive into the specifics later, but let's just say eBay actually makes GameStop worth $15 billion. That eBay adds $5 billion of value to GameStop. And let's say that GameStop actually adds about 10, 20 billion to eBay, 10 billion from here. Right? That they're paying 56, but that eBay's actually worth 60. Well, then you're looking at a $75 billion market cap. And what if on the pricing of the dilution, let's say we have a run up to $40 a share, right? Roaring Kitty comes back, retail piles in. They're like, oh my gosh, I want to buy eBay now so that I can benefit from the instant equity that's created on the other side of the dilution, etc. What if instead of the dilution pricing happening at 20, what if it actually happens at 40? Well, now you're looking at there's only 1.1 billion shares of GME out there. If you take a $75 billion company and you only have 1.1 billion shares in the float, guess what the new GME share price is? Instantly, $66. An instant, almost like literally a triple from current levels. And that's before any added synergies. That's before like new incredible anything. This 60 and this 15, that would not be based on them creating something that doesn't already exist. That would just be based on them doing what they already do, but for each other's benefit. When GameStop had trade in anything day, guess what? Every day becomes trade in anything day. Will more people trade stuff into GameStop? Yes. Do you think if GameStop is willing to take in literally any item that can fit in a box this big, that more people will bring stuff to GameStop? Yes, of course. Do you think if they can receive instant credit for anything, that GameStop will be able to get more used inventory that they can then sell at high margin? Yes, of course they will. Do you think that if all those people are coming into the store, that they will buy some more stuff at GameStop stores rather than if they had not shown up in the first place? Well, of course they will, because they're getting store credit. That's the currency that they're getting for the stuff that they're bringing. And what does GameStop have to pay to start doing that? Literally nothing in terms of incremental expense. They're already paying. They already have the leases. They already pay the employees. They don't have to pay anything else to start doing that. You know what I mean? GameStop, what do they have to do to eBay to somehow magically make eBay worth $60 billion? They don't have to do anything. All they have to do is tell the people to go home. It's addition by subtraction. Hey, You, overpaid executive. You, overpaid executive. You, overfunding marketing department. You, overly ambitious product development for a traditionally blue collar type of job. Hey, all of you, go home. Poof. Poof. Now we're making double as much money. Like this $75 billion market cap is what I would consider the high side of what's plausible on day one. Day one market cap could very plausibly be 75 billion. It's not based on live commerce taking off. It's not based on power packs growing at thousands of percent a year. That's not based on any type of new authorization, opening up new categories of collectibles, new types of things you can buy on power packs, new different. It's not based on anything new. It's just based on, hey, we have stores and employees that are not operating at full capacity. The stores could be making more money. The employees could have a harder job. Half the time they sit there and do nothing. They take 17 vape breaks a day. So yeah, if we had some more foot traffic, that wouldn't be too bad. We're already paying for that. Now we can just make more with the things we're already paying for. Hey, eBay, you're already spending a lot of money that you don't really have to spend. We don't have to do anything to fire you. There's going to be some expenses within the first year to fire them, but can the market look past that and say, hey, it's going to cost some money to fire these people, but it's obviously not a long-term expense? Of course they can look past that. And if the dilution happens at $40 a share, you're looking at $66 a share as the floor, basically. A triple as the floor. Worst case, you're looking at about a 20% increase and knocking at the door of warrants and convertibles, probably bursting through the door, again, because of these very obvious synergies and just, again, the S&P 500 being on the other side of it. So should the $8 billion that GameStop spends in their cash does not change their market cap because they are trading one asset for another. The $28 billion that GameStop borrows in debt does not, or sorry, the $20 billion that they borrow, 8's coming from their own cash, 20 is coming from debt. The $20 billion that they borrow in debt, does that decrease the value of their company? No. All it does is lower near-term earnings for the owner, and ultimately that does not affect the market cap if another owner could own it without the same financing structure. A rental house that's fully paid off is effectively worth the same as the asset itself is worth the same as a rental house that has a mortgage against it. Which one would you rather be? Well, you'd rather be the rental house that's fully paid off. But if you're fully paid off, then you end up being where GameStop has been for the past several years, which is, hey, why do you have so much cash? Why don't you do something? So GameStop, the past several years, people have been frustrated because they've been too conservative. Do something, Cohen. Look at us. We're down 45% over the past 5 years. Do something. Now they're taking a huge swing. Some people will say, man, now they're doing too much. I wish you didn't owe this much on your rental house. I wish you only owned this much on your rental house. I wish that you weren't diluting, issuing 700 or 900 million shares. I wish you were only issuing 100 million shares. Well, guess what? If they only issued 100 million shares, that means they would have to have 45 billion in debt. If they had 45 billion in debt, they would be underwater. They would be spending more than they're bringing in every quarter and adding a dramatic amount of risk to the company. So when you think about how much debt can they actually afford, great. How little can they keep the dilution to? Great. Ultimately, the worst case, you end up at a 20% upside. Best case, you end up tripling overnight, and then the fun begins. Then you start to see, how does the floor really rise? How does the ceiling really rise? What do they really build together to create value? You know what I mean? Kip Wolf says, if you don't trust in Ryan Cohen to create shareholder value, you are invested in the wrong stock. That's pretty well said. I mean, it's he is the, I don't know why you would trust him for the past 5 years and then not trust him for the next 5 months. Like, geez. Chris Livingston says $100 is becoming $20 in GME. Chris, that is not true. It's not true. I just ran the numbers as slowly as I could. I'm 2 hours and 42 minutes into this stream, and somehow you think that GameStop shareholders are going to lose 80% of their value. Do you think GME is about to be trading at $4 a share and that legacy shareholders are going to be worth $2 billion instead of 10? I mean, that's crazy. Kip Wolf said, if Chris could read, he wouldn't be in here shilling nonsense. It's a great point. It's a great point. Yeah, Chris, you are kind of going crazy on the shilling. I'm going to have to put you in timeout. You're being a little mean. Timeout. Boom. I just learned how to do timeouts. This stream is the first time I've ever given someone a timeout. It feels kind of fun. Vippy says, could they run down GME but not the new entity? How does that play out in terms of the two different holdings? They cannot run GME lower than basically like 19 a share. GameStop, and they've already used of their 900 million of the 1 billion they've authorized. So like the max literally that they can issue to eBay is 1.6. So if GameStop is not trading at like 18 something, the deal doesn't even happen. So if they tank GME below that between now and then, you just run the risk of a squeeze. Because there's people on the other side of the trade. GameStop doesn't exist in a vacuum. If you make this thing get low enough, people are going to start buying it. Right now, you can keep it kind of low because all this uncertainty, right? Who knows what's going to happen? But yeah, if GameStop pulls out of eBay, well, shoot. This company has almost 10 billion in the bank, and they're trading at 9.9 billion. Wait, and they're growing in profitability? Wait, collectibles is booming? Wait, Power Packs materiality is hitting? It can't stay this low if the deal falls apart. It also can't stay this low if the deal goes through. It's a win-win either way. Right now, the risk reward for owning a GME share is beautiful. Kip Wolf asked me if I have any estimate on GameStop's profit of their eBay stake. I don't know because they didn't announce any of their eBay stuff until the day after Q1. So they announced it after hours on whatever, May 1st or whatever it was. And so this most recent, right, from 103 up to 113 is not going to be represented in the financials. So whatever we see is going to be what they've appreciated so far. But I also don't really know like what the gains, it doesn't hit the income statement until they sell. So it's just going to be like an asset on their balance sheet. So we should see this number, the cash and securities number, should increase pretty meaningfully from Q4 to Q1. But it's not going to change like the operating numbers from Q4 to Q1 because they're not selling their position. And then whatever their balance sheet number is, it's actually higher in Q2 from Q1 because eBay's another 5% higher than it was at the close of Q1. And then when did they start buying their stake? How much? And how much did they buy? How soon? Right. My name says 125 is a 46% premium from when they started buying. It's true, but they probably didn't buy their whole position on day one. So did they start buying with a tiny bit and then ramp it up? Or did they put 80% of their position in day one and then they started adding to it slowly? Harvard says, hey, Jeremy, thanks for being a voice of reason. Thanks and cheers. Appreciate it. Jedi wants to buy a put option, I guess. I do not think that's a good idea, but be my guest. Davos says, how long would it take for a hostile takeover of eBay? It's a great question. I don't think Cohen wants to wait until next year. He made that pretty clear in his interviews that his plan is to buy, at least in a combined sense, right, beneficiary ownership along with other institutions that are on his side, at least 20% of eBay, call a special meeting and force a vote. If he can't get that to materialize, then I guess you're talking about next year, but and that's a possibility. It's definitely possible. Like he did say in his interview, like, hey, he'll do whatever it takes. Like if that means taking a board seat, chipping away from there, etc. Maybe. But he has said, like, it seems pretty clear to me he's going to try to force the issue. And I think, especially with the timing of the warrants as well, that he's interested in making this happen this summer. I imagine the vote would have to happen first in June. Between now and then, it's building up positions, aligning institutional interests, getting all the financing lined up. Vote happens, right? And building campaigning, public support. After vote happens, share authorization, comp plan, you lock those in. It could be the next day. It's like go time. Jonathan Pickett with the super. Thanks, Jonathan. He says, hey, Jeremy, did you notice RC said in his most recent interview that they have over 5% of eBay? Any idea how much they actually have at this point? I don't know personally. Kyle says he said derivatives. It's true. He doesn't own more than 5% of eBay's shares yet, but GameStop owns more than 5% exposure, meaning if they exercised all of their calls, then they would own more than 5% of eBay's shares. So I think they are going to continue building their derivatives exposure more and more, and then probably try to get some financing potentially even to exercise all of those calls rather than buying up the shares on the open market, potentially causing a squeeze on eBay, and then forcing the issue from there. But yeah, has he gone from 5% to 6 or to 8 or 10? It's a great question. I do think they will try to get their way to 20 between Cohen and GameStop. They're probably going to try to get their way to 20 so that they can call the meeting in June. Matt Burr says, hit that likes. Thanks, Matt. Carl says, what's a cheaper price now? We're at a cheaper price now than prior to owning a 5% stake of a $50 billion company that's up 40% in profit. Make it make sense. That's a great point. GameStop competitively is in a much better position now than they were a month ago, and they are trading even less than they were a month ago. Still up barely year to date, but we're basically at the low point. 2210 we touched on March 27th, and right now we are at 2210. So we are at the yearly low since the run-up happened at the end of January. Test out 21. I know we did in overnight hours the other day, but exciting to see all the pressure building in the stock. And it is true. It genuinely is a deeper value now than it was. And yeah, Jonathan says the price of eBay keeps going up. Definitely suggesting that it's being bought up steadily for sure. No doubt Cohen and friends are buying the stock. It also could be other institutions pricing in that a deal probably is going to go through. Patrick asked the same question. Yeah, definitely a bidding war is happening for eBay shares as the proxy war looms. No doubt about it. Lolera says, hey, Jeremy, suppose Roaring Kitty makes a comeback to support the takeover of eBay. How would he do it and win? First of all, I think he will wait until after the vote. I don't think anything's happening until after the vote. But after the vote, basically, he just probably tweets, probably posts a storm on X. And if he really wants to help, he will time it with the pricing date for the shares issued to eBay shareholders and try to get as few shares issued as possible by forcing a rally on the stock. I don't think it wouldn't make sense for him to do it before then, in my opinion. Okay, my voice is starting to give out, so I might be about at the end of what I can do today, but hopefully this helps. If you want a couple, added reminders, $8 bill. Well, geez. Plus $8 bill in stock minus $8 bill in cash equals no change to equity plus 20 bill in company stock plus 20 bill in debt equals no change in equity. Simple enough, right? Simple enough. Hopefully there is no more arguments about such silly things on the internet. What changes? Upside, higher, downside, lower. Key factors. Can you afford the debt payments? Did you buy an attractively valued asset with the debt, with the money? Is the asset appreciating in value at a rate higher than the cost of the debt? There you go. Sorry that it looks ugly, but I want to go ahead and type this out, make it as clear as possible. If you ever get lost in the sauce, just come back to this live stream after it posts. I do appreciate you guys. Kip Wolf says, thanks for the stream. Bubble says, peace out. Thanks for the info. Cheers to all you guys. Congrats on a fun week. Turns out May 13th, so far, possibly, maybe, not actually a very interesting day. However, May 13th is not over yet. Also, it looks like my Wi-Fi is giving out substantially, and I apologize for all of the lagginess, but I do appreciate you guys. Do we see something overnight after hours? Is May 14th, day one of a new day? Very possible, but I do think logistically, probably a deal literally can't go through until the share authorization is voted on. I also think that the compensation plan vote looks better if it happens before a deal goes through. You don't want GameStop trading at $60 a share, and now we're voting on Cohen to be approved for compensation based on a milestone that's already been accomplished. You probably want to lock those in first. But could there be something in terms of excitement, progress, maybe a handshake, maybe an announcement that, hey, we own 20% of eBay, like something that clearly shows clear progress, movement. Maybe the highly confident letter becomes a guaranteed financing, types of things we could see over the next 3 weeks. Matt Burr says it was 741 day on the SPY. It's true. The S&P 500 crossover, $741 per, I guess, like share of that index. Wham Bam says maybe May 13th price is the bottom. Yeah, have we hit the inflection point? Very possible that we have. Regardless, if a deal doesn't go through, I don't think any of us are stressed about GME's valuation. It's really like Upside, the thing, power packs. It's collectibles, but it's power packs. GME's ability to scale power packs goes up so much higher if they own eBay. So I want the deal to go through. That said, if the deal doesn't go through, now you're talking about a much smaller float and you still have a bunch of cash. You could ultimately authorize, let's do a one-time vote to do buybacks or acquire something else, or in some way try to create a squeeze type of environment to then go back to the negotiating table, maybe sell out of eBay, watch their stock start to spiral as shareholders start to turn against eBay's management and board, right? It's just like eBay holds all the cards at this point, in my opinion, or sorry, GameStop holds all the cards at this point, in my opinion. And hopefully in this video, I was able to distill that down for you guys a little bit more clearly. Okay. Orange guy. Great to see you. I don't think power packs going crazy will move the needle that much on the report one way or another, but I do think it, as far as the eBay deal, I do think it will move the needle for GameStop stock, because I think it is a multi-billion-dollar value already that I don't think is being priced in at all. So, but that's still, if it's a $2 billion company, GameStop owns half of it. That's $1 billion to GameStop. That's a 10% upside from where it's currently trading. So it's not like overnight to the moon, but it's meaningful for sure. It starts to change the narrative in a really important way. So yeah, will be very fun to see. Okay, we'll talk deeper about valuations and we'll cover some Cohen interviews here soon on the channel. I appreciate all the love. Thanks to all you guys for being locked in on the stock these past few weeks. A lot of interesting times, a lot of bad actors out there, a lot of confused people out there. So it's a good time to be informed. And I do appreciate you guys for letting me be part of your source of information. And of course, always check my work, fans of the channel, all the above. Do appreciate it. That's all I got for you today. I will see you in the next one. Cheers.